Want to turn your savings into wealth? Curious about how people make money from the share market? Well, you're in the right place. Today, we're going to break down the basics of the share market in the simplest way possible. No jargon, no confusion, just clear, easy to understand guidance. So, whether you're a student, a working professional, or just curious, stick around because this could be the start of your financial journey. What is a share? A share represents a unit of ownership in a company. When you buy shares of a company, you become a shareholder and own a portion of that company. If the company performs well, the value of its shares may increase, allowing you to sell them at a profit. How does the share market work? Primary market. Companies issue new shares to the public through an initial public offering IPO. Secondary market. After the IPO, shares are traded between investors on stock exchanges like the NSE National Stock Exchange. Why do companies issue shares? Companies issue shares to raise money for expansion, product development, or debt repayment. Instead of taking a loan, they allow public investors to become part owners of the company. Types of shares. Equity shares. These are the most common shares, giving investors voting rights and dividends. Preference shares. Shareholders receive dividends at a fixed rate before equity shareholders, but have limited or no voting rights. Key market participants. Investors. Individuals or institutions who buy shares for long-term gains. Traders. People who buy and sell shares frequently for short-term profits. Stockbrokers. Intermediaries who facilitate buying and selling of shares for a commission. Regulators. In India, the SEBI Securities and Exchange Board of India regulates and monitors the stock market.